Bitcoin's computational power is dropping, signaling the capitulation of Bitcoin miners. This actually reflects a positive sentiment for Bitcoin, while at the same time, Ethereum short positions have increased by 40%. This creates the risk of a short squeeze in the market, which could push Ethereum higher. Meanwhile, Solana's funding rate is in negative territory due to lower network activity. What does all this mean for the market? Let's talk about Bitcoin's hash rate. Right now, you're looking at a technical indicator called the hash ribbon, which consists of the following parameters. First, you'll notice two moving averages. The first one, shown in green, is a 30-period moving average, meaning it calculates the average Bitcoin hash rate over the last 30 days. The second one, displayed in blue, is a 60-period moving average, which does the same thing but over a longer 60-day period. This allows us to measure Bitcoin miners' activity and track whether it's increasing or decreasing. The idea is to compare the 30-day average with the 60-day average. The shorter one reflects more recent activity, showing short-term trends, while the longer one provides a broader view of long-term behavior. By comparing them, we can see when the short-term hash rate surpasses the long-term hash rate, indicating an increase in mining activity. On the other hand, if the 30-day hash rate falls below the 60-day hash rate, it suggests a decline in mining activity. But why does this information matter? To understand this, we need to look at what causes these fluctuations in Bitcoin's hash rate. And here, efficiency plays a key role. Bitcoin miners operate with production costs, major expenses like electricity, space rental, worker salaries, and more. They constantly calculate whether mining Bitcoin remains profitable by weighing their costs against their earnings. If electricity prices in their country fluctuate, or if Bitcoin's price changes significantly, mining may become less profitable or even unprofitable. For example, at a certain point in time, miners might determine that continuing to mine Bitcoin is no longer worth it. So when miners shut down their machines, they stop mining Bitcoin. This is one of the consequences miners face when mining becomes unprofitable. The second consequence is that, to cover their inactivity during these unprofitable periods, they still need to pay for operational costs. Many of them will have to sell Bitcoin reserves they previously accumulated to cover next month's expenses. Now that we've explained this, which I consider essential to understand, let's talk about what the hash ribbon indicator actually does. It simplifies everything for us. It identifies the moment when the 30-period moving average, the green line, crosses below the 60-period moving average. At that moment, it draws a vertical line for easy visualization. Then, the chart waits for the 30-period moving average to cross back above the 60-period moving average. When that happens, as we see in this example, the indicator marks another vertical line, visually signaling what's happening in the market. Now, take a look at this example. At this point in time, mining was not profitable for many miners. They shut down their machines, and some sold reserves to cover costs. The indicator suggests that we may be in the present or approaching a significant market bottom. In this case, we see that shortly after, the price confirms that we're at an interesting support level. Then, when the 30-period moving average, the green line, crosses above the 60-period moving average, it usually coincides with a price recovery. That's when mining becomes profitable again, and miners restart their operation. Often this is followed by an upward price movement. Now, let's clear the screen and focus on two key concepts. First, this is not a foolproof indicator, nor does it tell you exactly when to buy or sell. It simply provides valuable information. And now, let's analyze what that information really tells us. First, consider where we are right now. Notice how a crossover is happening and how the indicator is signaling a shift. Now, let's talk about how we can use this data to our advantage. Point number one, we must recognize that miners might be in a situation where they need to sell their Bitcoin to convert it into fiat currency and pay electricity bills. This suggests an influx of selling pressure, which at first glance might seem bearish. One might think if there's selling pressure, the market will drop. That would be the simplistic view. But here's where we flip the narrative. The smart money, the big players in the market, often take advantage of this excess selling pressure to find liquidity. They use it as an opportunity to accumulate, eventually driving the price higher. This is why an indicator like hash ribbon has historically worked well. When you break it down logically, it makes a lot of sense. The second point is exactly what I just mentioned. The smart money takes advantage of that selling liquidity to eventually push the price higher. So, as I was saying, we're now at a point where miners could be struggling to make their operations profitable. Look here, it's very likely that they've already started shutting down their machines, and some may even be selling Bitcoin to cover costs. When we analyze this on the chart, we can see that from a medium to long-term perspective, this situation encourages a positive outlook for Bitcoin and the broader crypto ecosystem. Now, take a look at how hedge funds are positioning themselves in Ethereum. They're being extremely aggressive on the short side, with a significant 40% increase in short positions. These numbers come from the CME, which means it's hedge funds driving this activity. A simplistic perspective might suggest that such a substantial rise in short positions reflects a negative sentiment for Ethereum in the medium to long term. And at first glance, that might seem logical, but let's flip the script again. Let me ask you something. When an asset's price has such a clear positioning in one direction, what could happen? What do you think hedge funds would do if from this moment on Bitcoin's price started to rise? Do you think they would just sit there doing nothing, watching as they lose massive amounts of money on their investments? Or would we see a short squeeze? In other words, hedge funds would start covering their short positions by opening longs to stop their losses from spiraling out of control. As you can see, we're not dealing with an indicator that predicts exactly what will happen. Instead, we're adding context to this data analysis, and without a doubt, other investment funds are also analyzing the situation, seeing it as a huge opportunity. They know know exactly how hedge funds must react to avoid catastrophic losses, and that's not even mentioning Solana's futures funding rate, which is currently negative. We can cross-check all this information, and now I'll explain its significance and how it impacts Bitcoin's chart. But before that,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Solana's complex situation stems from a key issue. On-chain volumes have dropped by 28%. This means fewer users are moving funds, swapping tokens, or interacting with DeFi protocols. But it's important to note that this isn't an issue exclusive to Solana. Networks like Ethereum, BNB Chain, Sui, and Polygon are also experiencing the same trend, making this a broader market-wide issue. And this should already be triggering a light bulb moment for you. This situation is largely driven by the price correction of memecoins running on the Solana network, as well as a decrease in activity on decentralized exchanges. As a result, perpetual futures, where traders use leverage to bet on price movements, are now showing a negative funding rate. You can see it clearly on the chart in front of you. This shift began on February 2nd. Now, if you're wondering whether this automatically signals a bearish future, let me tell you, assuming that just because of this situation, the market must decline is, once again, an overly simplistic reading. Across all three blockchain charts we've analyzed, we've highlighted the common, surface-level interpretations you can find anywhere online. But unfortunately, most analysts don't bother connecting these dots with the concept of smart money manipulation, which is exactly what we focus on here at Crypto Insight. So now, let me give you the counter-narrative, our actual perspective. And for that, we need to look at the traditional chart, starting with Solana. We can clearly see a significant drop in Solana's price, likely due to everything we've just discussed. And yes, the futures funding rate is negative, which could lead many to assume the market is bound to fall further. But when we cross-check this with Solana's structural integrity, we see that it is far from being in a black swan scenario. For a true black swan event, we would need to see a major breakdown in the structure, similar to what I'm showing you here. And when we factor in Bitcoin's hash rate situation, where miners could be capitulating and potentially signaling a market bottom, this suggests that while Solana's price might still dip lower or even form a bear trap, all that fear and selling pressure from leveraged retail traders could actually be absorbed by large institutions. And that, in the long run, could set Solana up for an upward move. Now, shifting to Ethereum's chart, remember this, hedge funds are currently heavily exposed to short positions on Ethereum, and take a look at where we're coming from. Of course, the price could create a black swan event and send everything crashing down. Physically speaking, it's possible, but based on everything we've analyzed so far, there's a massive bearish load, an explosion packed with dynamite that could be used in the future in one way or another to absorb, accumulate, and then trigger that long-awaited move. Hedge funds might soon find themselves needing to buy Ethereum aggressively to cover their short positions, and if the price moves against them, if someone steps in to accumulate and pushes the price in the opposite direction, they may have no choice but to buy back to cover, which could trigger an explosive move in the asset. At the same time, Bitcoin miners could be capitulating right now. They might be injecting sell pressure into the market, just like we've already seen with Ethereum. And with retail traders over-leveraged in short positions, Bitcoin could follow the same pattern. If miners keep selling into the market, we could see relentless downward pressure across all assets. And as we've said, we don't know the final outcome. Maybe this does lead to a black swan event and a medium-term bear market. It's possible, but what we're identifying here is a common risk factor across all crypto assets, a shared denominator of opportunity cost and risk. Institutions could take advantage of this massive bearish liquidity entering the market from different sources and for different reasons. If that liquidity ends up getting absorbed, if a large institution or even multiple big players step in to shake things up, then we could be looking at a major defensive zone. Bitcoin might create a scare if it wants to, but after that, it could be ready to move. Again, this is just a hypothesis based on the data we're analyzing on the blockchain. But if everything aligns, the resulting move could be extremely powerful. Now, if you're wondering, what would we need to see on the chart to abandon this hypothesis we've been discussing in this video? The answer is simple, a black swan event. Alright, so how could a black swan scenario unfold in Bitcoin, Ethereum, and Solana? What would need to happen for the market to turn definitively bearish? Let me explain. But first, I want to introduce you to our private Telegram channel, which is completely free. In fact, at the time of recording this video, we're also live streaming for the community. During these live sessions, we look for trading opportunities in the futures market. We focus on intraday trades, and within this community, members also share their operational ideas, what they're working on and what they're looking for. in the markets at any given moment. It's honestly very interesting. This community is constantly learning and improving. So if you're an active trader and tired of trading alone, you can join our community. Signing up is very simple. The requirements are as follows. You need to be a user of BitUnix or buy DFI. Have deposited cryptocurrencies into your BitUnix or buy DFI accounts with a minimum value of $100 and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. Don't miss this unique opportunity to become part of our exclusive Crypto Insight Premium community. Come join us. We're waiting for you. To dismiss the hypotheses we've explored in this video through on-chain analysis, you would need to see a black swan event in these assets. In Bitcoin, you'd have to witness the loss of this structure, this key defensive zone, and see an inability to recover. If that happens, my friend, all the ideas I've shared with you would no longer be valid. On a macro level, Ethereum tells us something very similar. If Ethereum were to lose this defensive zone, that could signal a black swan event. And if the price fails to recover, things could start looking bad for Ethereum in the medium and long term. As you know, that's not our current outlook. I'm simply explaining when it's time to step back, when your horse turns into a donkey. Now, take a look at Solana's chart. If the price were to break below the base of Solana's ascending channel, triggering a black swan event, and then fail to recover, things would look anything but bullish. That would signal the beginning of a bear market. But as you know, that's not what we have in mind right now. We're paying close attention to the Bitcoin hash rate, the extreme bearish positioning of hedge funds on Ethereum in the CME, and the negative funding rate in Solana's futures market. Now tell me, what do you think could happen in the crypto market in the medium to long term? Leave your thoughts in the comment. If you enjoyed the video, give it a like, subscribe, and hit the notification bell so YouTube lets you know about future uploads. And don't forget to share this video with your friends and other crypto and trading communities. Good luck and see you next time. Subscribe.